Welcome to the Go Big with Gib podcast, where we talk to professionals, business owners, and entrepreneurs about their big wins. Hey everyone, and welcome to this episode of Go Big with Gib. I'm Gib Irons, your host. Today I want to talk a little bit about a shift in the game. I want to talk about how the multifamily real estate market has really slowed down over the past couple of months and why that's teeing up a prime opportunity for you to consider medical real estate. All right, so if you've been in the real estate game for a long period of time, then you know that markets don't move in a straight line. Multifamily, those large apartment complexes that we've been piling money into, has been a cash cow for years. Low interest rates, skyrocketing rents. Investors like me have been jumping into syndications to grab a piece of the action. But here's the reality check. Things have slowed down. Interest rates are up, cap rates are tightening, and deals that used to pencil out like a dream, they're sitting on the table for a lot longer. It's not a crash, it's a breather. Now, I've seen this before. Markets cycle. Always have, always will. And when one sector cools, smart investors don't panic, they pivot. Multifamily's taking a timeout, and that's fine with me because it's setting the stage for something that I've been heavily into lately, medical real estate. Yeah, you heard that right. Medical offices, dental offices, veterinary offices, it's a different beast, and it's where I'm putting my money to work. So let me break it down for you. I've been investing in passive real estate syndications for years, pooling capital with pros who do the heavy lifting while I just cash the checks. And multifamily has been great. But medical real estate, it's a sleeper hit. Think about it. Healthcare is not optional. People don't stop going to the doctor because interest rates have gone up. Demand's steady, leases are strong. We're getting triple net leases, think 10 to 15 years. And the tenants, they're rock solid. Doctors, medical groups, dentists, they're not flaky startups that are ghosting us on the rent. Our medical real estate fund is called Health Wealth Capital, and it's built on this. We're scooping up properties tied to healthcare with long-term triple net leases. The multifamily slowdown has got investors second guessing, but medical real estate's sitting pretty. Stable returns, downside protection, and cash flow that doesn't flinch when the Fed hikes rates. I've been around long enough to know that timing matters. Multifamily's pause isn't a signal to sit on your hands. It's a nudge to look where others aren't. I'm still in syndications. I'm still passive, but I'm doubling down on medical. Why? Because the numbers don't lie. Cap rates are holding firm, yields are juicy, and the risk way lower than chasing the next apartment deal in an oversaturated market. So here's the play, folks. Multifamily is taking a nap, so it's time to go big somewhere else. Our medical real estate fund is open for business. It's steady, it's smart, and it's built for the long haul. This is Go Big with Gib. Markets shift, winners adapt. Hit subscribe, share with a friend, and let's talk next time about how to keep your money moving. Look forward to catching you later. Thank you for listening to this episode of Go Big with Gib. If you haven't already, go follow us on social media at Gib Irons. We'll see you next time.